Hello and welcome to the show. This is a special video that was not originally planned to be made, but MetaMaterials came under a short attack by a company called Kerrisdale Capital. So I made this video. Let me start off by saying I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Okay. So I first found out about it by this tweet from George Palikaris. He said, the Oscar for the best short and distort winner for 2021 goes to Kerrisdale Cap, TikTok. Time's running out. Let's see. Kerrisdale Capital, turns out, had announced that they are short metamaterials. They have a short report that's available on their website, and they tweet about metamaterials having no real revenue or useful technology. They say it's got a sordid history of disappearing segments, failed products, fake medical devices. Twitter promotion enables capital raises. They have multiple tweets that they go on because they need to do that, apparently. Metamaterials, I said, is a collection of failures, fakes, and negligence, topped off by shady penny stock reverse merger, which incidentally is being investigated by the SEC. A disclosure you can find in Meta's latest 10Q footnotes. Hard to imagine the stock is worth any more than $0. Meta's penny stock reverse merger with Torch featured a significant Twitter promotion leading to 2 share price melt-ups, culminating in a dumping of $160 million worth of stock on retail investors at multi-billion-dollar valuations for a company with barely a hint of an actual business. So that's what Kerrisdale Capital, who is short metamaterials, says. So let's first talk about what shorting is and how shorting works. Okay, shorting is a process where someone wants to make money by selling something that they don't have and then buying it back at a lower price. Right? We don't think of shorts at first because most people think about going long. They want to buy low and sell high. Shorts want to sell high first and then buy low later. Okay, so how does this work? Let me explain. I've got 3 people here. Ms. Loner, she's got a bunch of stock. Mr. Short, he has no stock. And Mr. Buyer, he wants to buy stocks, right? So what happens is Ms. Loner doesn't want to sell the stock that she has. She likes her stock because she's got long-term plans for it. But Mr. Short wants to sell stock that he doesn't have. He wants the price of the stock to go down. So he borrows the shares from Ms. Loner, and she lends him the shares. And she hasn't sold him the shares; she's just lent him the shares. So he owes the shares back to Ms. Loner. But what Mr. Short does is, now with his borrowed shares, he sells them immediately to Mr. Buyer. Okay, and Mr. Buyer buys the shares. He's got the shares. He's happy. Now, Mr. Short, he's now responsible to give those shares back to Ms. Loner. Okay? Mr. Buyer, once he's got the shares, he's happy, he goes away. Mr. Short still owes the shares back to Ms. Loner. He owes dividends. If the company pays any dividends, he owes that, and any other liabilities, right? So he's got a bunch of liabilities right now. He also owes probably borrow fees to Ms. Loner because she's not going to loan her stock for free. So he's got a liability on his hands, and he wants that stock price to go down as fast as possible. Okay? So that way he can get rid of his liability. So along the way, he finds some other shareholder after he's spread, rumors about the impending end of the company, and he buys the shares from that other shareholder who sells it to them, and he cancels out his debt. He gives the shares back to Ms. Loner, and then all is done, right? He closed his short position. He's happy. That's how it is supposed to work. And that's how it normally works, right? But Kerrisdale Capital is, they've announced that they're short and they are a hedge fund, so they take a little bit more advanced version of that. So who is Kerrisdale Capital? I did a search for them. They said a bunch of negative things about metamaterials and Torchlight. So, what kind of reputation does Kerrisdale Capital have? Well, they wrote some articles on Seeking Alpha, and their success rate is less than half. You could flip a coin. Their articles apparently are near meaningless. Interestingly enough, if you flipped a coin, you would at least, get a 50% chance of being right. They're less than 50%. Their average return is negative 17.3%. You would lose money if you followed Kerrisdale Capital's advice. So that's the first thing I found out. Did a quick search, and that's what shows up first. Secondly, we find out this is their founder, Sam Andraghi. And he apparently was arrested on DUI and cocaine charges in the Hamptons in 2016. That's a headline from CNBC, right? So what else happened? Oh, well, it turns out he wasn't just arrested. He was busted for cocaine charges. He was in possession of cocaine. Turned out the reason he was arrested for those charges is because at 3 a.m. in the morning, he was driving drunk, and he took his car, which was a BMW or so, and he drove it to the other side of the road, and he ran into a Ford SUV. And when police came by, they found cocaine. Anyway, so that's the other thing you find out about Kerrisdale Capital. Their reputation doesn't seem very good right now. I mean, the first thing you find out is that they aren't very good at what they're supposed to do, which is do financial analysis and make money on finances. Apparently, they lose money, and in terms of reputation, they've actually been arrested. So wow, interesting, criminal charges. So let's see what else. Apparently, prior to announcing their short position, Unusual Whales on Twitter found out that there was a lot of unusual put volume, a lot of unusual options volume in terms of puts before they announced their short position. So they opened up a ton of puts, which is the right to sell something at a particular price, right? And if you drive the price down, then those puts become valuable. So they bought a bunch of puts before they announced their short position and driving the price down. So that sounds a little bit like market manipulation, and I would think the SEC would be interested in that. They probably are, because they're probably investigating this guy. Anyway, C-Plant on Twitter, he said, "Hey, look, you guys must be really mad now, especially since we have the secret decoder ring. Thanks for the signal, boys." So what C-Plant is saying is that about 4 days ago or so, the Department of Justice announced that they're looking at particular short hedge funds who are apparently colluding with each other by sending messages towards each other in terms of how to manipulate stocks by looking at the volume of shares that they buy or sell, right? So if we see the volume numbers hit a particular number, in this case it looks like the number is 6, it means something. It means, hey, we're going to short this, you go next, slam the price down, we'll do a short ladder attack or something like that. Who knows what they're doing? I don't know. But apparently it's some sort of signal for some sort of coordinated thing that C-Plant thinks. I know of Kerrisdale Capital because previously they shorted a company called Camber Energy, CEI, stock symbol CEI. Camber is an interesting story because Camber is a company that where the management was corrupt. There was a whole bunch of problems with it, but that management basically drove the company into the ground, and the company was in bad financial shape. Well, a new guy comes along, a new CEO. His name is James Doris. He's from Viking Energy, right? And he becomes the CEO of Camber, and he tries to turn it around, tries to make the company into a better company, fix all the problems, right? And just as James Doris is coming around, fixing the problems, getting the company's finances in the right shape, Kerrisdale comes along and shorts the crap out of Camber. Interestingly enough, Camber Energy has some deals because they're working with clean energy. They have some deals with ESG, and ESG has this thing called a carbon capture system that they've patented and they've licensed to Camber Energy. and Viking Energy. Viking is a subsidiary of Camber. And so ESG has licensed this technology, which Kerrisdale has said is a pile of crap. They said it's useless, it's meaningless. And they said it doesn't work, and there's nothing behind it, and all that. Well, what happened was that Viking Energy, which is a subsidiary of Camber, they purchased the exclusive license to use this clean energy process for all of Canada. And it uses something called a reverse Brayton cycle. And they've got a bunch of patents on it. Not only that, they have a bunch of scientists there who actually went over line item by line item of what Kerrisdale Capital spoke about this clean energy process, and they said these guys basically don't know squat. They don't, there's no science behind anything that they're saying. They're just like a bunch of yutzes talking about things that they have no idea about and just trying to badmouth it. And that's what they do, because they try to bring the stock price down. And they were successful in bringing the price of Camber Energy stock down, right? However, ESG says basically everything that Kerrisdale Capital says is a pile of bunkum, and they've essentially gone over their short report and taken it apart line item by line item. So that's that. Anyway, so what's going on next? So we've talked about Kerrisdale Capital. Let's talk about MetaMaterials itself. What have they done lately, right? What have they done that that we know about? Well, apparently they made over $100 million for Nova Scotia Crown, who's an early investor. So if we look, the Nova Scotia Crown, which is Nova Scotia government, says it made $104 million from its investments in MetaMaterials. And they provided $3 million of funding into the nanotech company, and they came out with $100 million. That's a 35-fold return on investment. They're very happy with MetaMaterials, and they hope to be doing more of this type of thing in the future. Right? They want to have successful startups in Nova Scotia, which are driving the economy of Nova Scotia forward, and adding jobs, helping the economy, growing the economy, doing good for Nova Scotia, because that's where they're based. Apparently, also, MetaMaterials has been winning awards. They won innovation awards for their technology at Tech Connect. They won 2 of them. One for their NanoWeb transparent antenna, and another for GlucoseWise. Okay, this is a place where you have got a ton of different places that are competing for these innovation awards. But MetaMaterials got 2 of them. So we've got some very intelligent people here who gave out these awards to MetaMaterials. What else has been going on? Well, Lux Research also said MetaMaterials received the Lux Innovator of the Year award for the green 5G application that they co-developed with another company in Japan, Seikusu SC. I think I'm not sure if I can pronounce that right, but anyway, Lux Research, which I believe is associated with Lux Capital, they're very happy with MetaMaterials, and they think that they've got some technology that's quite innovative here. MetaMaterials recently increased its patent portfolio to over 247 patents in 2021. So apparently the U.S. Patent Office thinks MetaMaterials stuff is worth something, because they've been giving out a lot of patents to MetaMaterials for innovating. And they recently, with a lot of the money that they have in the bank, they bought a company called Nanotech Security. And Nanotech is trusted by various governments because they help make the security features that go into money, so that way money can't be counterfeited. So Nanotech who is apparently very well trusted by lots of governments, has made innovative features, and they've recently been acquired by MetaMaterials. Okay. So what is MetaMaterials' finances like? Maybe there's, maybe they've got financial issues, right? Well, if we look at it, so this is a tweet that that George Palikaris talked about the SEC, right? So unlike a lot, people who, so I don't quite understand where Kerrisdale Capital is coming from, because they say that this information about the SEC subpoena that George Palikaris had to comply with is only found in the 10Q, when George Palikaris himself was tweeting about the fact that, he had to go answer some questions for the SEC, because they wanted to find out some stuff that was going on. Not necessarily about metamaterials, but they just wanted to ask him some questions, probably about someone else that they were investigating, right? That's what C-Plan says. Don't worry about the SEC subpoena. Usually it means that that they just want information that you probably have, though you're not aware of it, that is behind other things that they're investigating. The SEC may be investigating something else, and you may just, have some information that they could use. So anyway, he tweets about it, and he's a very open CEO. So for a short hedge fund that apparently is on Twitter a lot, they are unable to see George Palikaris' tweets on Twitter, and they have to look in the back of the Form 10Q to find out that he needed to answer some questions for the SEC. Apparently, they have some issues with either understanding what they're doing or communications or something. Maybe it's because they were on I don't know. Maybe it's cocaine induced or something. I don't know. Hard to say. But apparently they have to go searching for things that are clearly obvious, right? Anyway, so metamaterials, their long-term debt is $2.7 million. It's not very much debt, considering that they have $140 billion of cash and cash equivalents in the bank. And that's according to the last Form 10Q. That's right up front. They did spend some of that money to buy nanotech. So they now have a company worth 90 billion Canadian after having spent some of that money. So that seems a fair trade. Anyway, so if we look at Fintel, we can see that insiders own 18% of metamaterials. Insiders are confident in metamaterials. Not only that, George Palikaris himself has tweeted that he's going to buy more shares. He had to sell some shares because he had to pay the tax man, but once he's done that, he's buying shares. He's increasing his position. That doesn't sound like someone who's trying to, do a pump and dump or anything like that. That sounds like someone who is confident in their company, wants to get as much stock in their company as possible because their company is going to be making more money in the future. Okay. Also, they have oil and gas assets, which are worth a significant amount of money, and those are being sold, and they expect to dispose of the oil and gas assets by early Q1 of 2022. That will be either a dividend or a spin out, maybe both, who knows. But in either case, we're expecting a fair amount of assets to be disposed of, and value will be returned to shareholders as a result. So that's pretty good. So the short attack happened on the 14th of December, and it did drive the price of the stock down, but it looks like the price of the stock is coming back up right now. It's closed today, which is Wednesday, at about $3. So the price of the stock has come back down. I mean, the price of the stock has come back up. So you might have had an opportunity to buy it because of the shorts. Maybe you'll have an opportunity in the future. It's hard to say. But I think Metamaterials is doing quite well, and they seem to be quite resilient. The shareholders of Metamaterials tend to know what's going on because George is both very open and we understand the stock. So anyway, so that's what this video is about. I feel confident in George right now. I feel confident in Metamaterials and Metamaterials management. But let me state that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. And with that, I'm saying goodbye and good night.